Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European indices for the morning of the 1st of February, Monday, 2016. Okay, be sure to visit CFDs.com for your trading needs. Certainly, you are eligible or certainly qualify for the potential of up to a 25% cash bonus on your new trading account. If you are interested, simply email me at daytrader at inter-market-analysis.com and I'll certainly get that bonus applied. Alternatively, you can visit the educational site www.cfds.education to certainly learn more. Okay, let's have a review of this morning's obviously price action and the bias that this market is currently holding. Okay, we had the Nikkei obviously higher, 346 points, almost 2% higher overnight. And that's on the back of those negative rate story from last week. Obviously, the yen is certainly weak and is helping the Japanese market and has remained afloat. We have the Hang Seng and Shanghai down overnight, mainly due to the weak economic data out. We had the Chinese services PMI, non-manufacturing PMI came out weaker, and then we had the cakes in actually come out stronger. So a mixed set of results there, but overall certainly interpreted as being bearish. And as you can see with regards to the Shanghai index, let's just bring up the Shanghai for you. The Shanghai index is still remaining below the previous support equals resistance. Okay, so again, something to watch. Now, having said that, the weekly chart now is very close to the 200 MA, so there is a very strong possibility based on a potential Chinese rate cut that we could see one hell of a short squeeze. So again, I am of this opinion now, given the fact that we had this drop today, and it certainly is looking ever more likely given the fact that the European and US markets now are set up for a potential rally. So again, we'll discuss that in the well, I've already discussed that in the US markets video, but the European markets, I'll discuss that shortly. Okay. Now, in terms of alternative data, we had economic data from South Korea that actually came out worse than expected. I think it was the worst. South Korean exports fall almost 18.5%, worse since 2009. That certainly didn't help the commodities or the indices overnight to a large extent. We also have concerns with regards to Nigeria and the default there. Apparently, they are requesting a 3.5 billion loan due to the commodity route hurting their fiscal deficit. Okay, or creating a fiscal deficit. So their fiscal situation certainly isn't very healthy. Now we have Brexit concerns, potential talk I think over the weekend with Mr. Tusk and Mr. Cameron, and again that story certainly is doing the rounds. Now we have Brazil's Petrobras, which is actually reducing its investment by 5%, which again certainly is putting weakness on the FTSE 100. Okay. The Iranian rejection of any potential oil output increase, oil output cut, and also with their report this morning from OPEC certainly sent the FTSE 100 spiraling down, and that was based on, let me just go back and here we go. Reuters reporting comments from OPEC source says it's too early to talk about an emergency OPEC meeting. Okay, so that certainly dashed expectations, okay, of any potential collusion for an oil output cut. Okay, so that certainly hasn't helped, okay, to a large extent. Now, we've had Ryanair, worse than expected, earnings results, Italian PMI, worse than expected, and potential European growth stagnating as well. And we did expect the rate cut over the weekend, which unfortunately didn't transpire from China, and that was certainly a reason to go into a risk-off mode today. Now, with regards to the bullish arguments overnight, as we know, the Nikkei was up by almost 2% overnight, 340 points. Negative rates by the BOJ, so that certainly remains the put in the market. The negative rates put certainly remains. Russia and Indian PMI certainly, India's PMI certainly came out higher, stronger than expected. Rolls-Royce potential new bid. BT earnings stronger than expected. Julius Baer. German and French data, French and EU data came out in line, but German data and Spanish data certainly beat expectations. So certainly the number of bearish arguments, I mean the bullish arguments certainly are almost on par Now, given the fact that European indices have fallen now, the bearish news from my perspective certainly is factored in, and we are looking for a potential rebound and a rally. Okay, so any other economic data that I can think of other than US data later on, and that will be quite important because we have personal consumption expenditure, personal income, and personal spending, which I think is going to be crucial, construction spending as well. And we also have a Draghi speech at 4 o'clock, so that's something certainly to consider, given the fact that his tone as of late has now turned even more dovish, okay, which should support European equities and force the euro down. Okay, so where are we now? So from our perspective, or trading perspective now, we're basically focusing on the negative rate story. Oil prices have certainly kept afloat, even though we've had weaker Chinese data out overnight, which is obviously promising, okay, and that should help equities higher. Now, we have had a comment from Mr. Nowotny, which is very dovish, and certainly is basically rekindling the QE trade, which is ECB, sorry, Mr. Nowotny and Mr. Couere. Mr. Couere states policy stance could be reconsidered in March, which obviously is a pro-QE trade. That means the euro is going lower. Mr. Nowotny, global economy on moderate recovery track, sees weakness in emerging markets, financial volatility as most urgent issues. Hence the reason why the argument for more QE certainly gathers pace with comments like that. Okay, so again, dovish rhetoric. So let's see where this market is now from a technical perspective. Let's bring up a chart of Eurostoxx, which is generally a good gauge. Now, the Eurostoxx themselves on the daily chart, you are looking at consolidation given the Friday's bullish candle. And really, it's a pattern here that basically means that we're consolidating and we're going to rip higher. Okay, you have the unfilled gap that needs to close at 3070. My bias would be in the bullish camp, given the fact that you have the Draghi put, obviously going into March, the QE, etc., etc. Given the fact that the policy stance certainly has changed, and given the weakness in China and obviously globally in the US to a large extent as well, it certainly bodes well for the pro-QE obviously debaters. So therefore you are looking at potential additional QE. Now you also have an inverted head and shoulders formation here as well. So there's your left shoulder, your head has gone in, you're looking at consolidating here, and then obviously you're looking to rip higher. So bias remains bullish from my perspective, and first of all we need to close this gap at 3070. Next resistance is at 3140, and they are the two zones to watch out for. The 60-minute chart of the Eurostoxx, again we are holding this great wall of China. It's probably the best way of explaining it, 3050. Once we get past that, then obviously the bulls certainly will start to come on board. Now you have 3070, the initial resistance, which is gap fill, and then obviously you have 3120 and 3140. So they are the zones that we are going to be observing, okay, for now. So Eurostoxx certainly remains well bid based on the Draghi put, so bear that in mind, okay. 10-minute chart of the Eurostoxx, we opened up a pivot high, I think overnight we were at 3060, 3070. Obviously we've come off that now, and we are looking to potentially move higher. We failed to hold that neckline at the 3028. We have pushed as low as 3020 now. You have the 200 MA. You do have the unfilled gap at 2980, but that certainly looks like it's certainly unlikely to be filled due to the negative bias in negative rate bias in Japan, and that certainly should help this market stay afloat. Adding the fact that the Nikkei was obviously high again overnight, and really it's all about the BOJ and the yen now. Okay, so I'm certainly expecting a potential move on a thrust higher. Okay, Europe 350 again inside bar consolidating, certainly bullish consolidation, looking for a thrust higher. DAX 30, okay, DAX 30 certainly seems to be consolidating here again. Same type of pattern, really. I mean, it's the same inverted head and shoulders pattern that you can see or observe here. There's your left shoulder. Head obviously has gone in. We're consolidating and then looking to potentially rip higher. So again, inverted head and shoulders formation going into Mr. Draghi's March QE, which is very shortly. And obviously the comments this morning certainly will help the QE trade as well, okay. So certainly looking for a potential move higher, and then we have target this gap fill at 9960. The next one is obviously at 10200. Okay, 60-minute chart of the German DAX. Again, it's a great wall of China. This great wall, we just can't penetrate it at 9890. Once we do, then the gap fill immediately at 9950, 9960. The next gap is going to be at 10200. So they are the zones that we are watching very, very carefully. Okay, downside support is seen at 9580, 9600. On the German DAX. 10-minute chart of the German DAX. We've come off the highs. We did open up at 9820. Obviously the market has come off there. We are into potential previous resistance equal support. So this zone here is going to be very important. If that fails, obviously you have gap fill below at 9640. Again, very unlikely for that to occur, given the fact that German data certainly came out stronger, and oil certainly seems to be holding, and obviously you have the Draghi put and QE and the BOJ put as well. So bear that in mind, okay? Right, let's have a cross-reference that now with the French CAC. Let's see exactly where this is positioned. Daily chart, the French CAC at the moment, it certainly looks like it's broken out the potential bearish channel, consolidating, and now looking to potentially close that gap at 4,500. So 4,480, 4,500, and certainly looking bullish from that perspective, and certainly looking to potentially break out. The 60-minute chart of the French CAC at the moment certainly is struggling at this gap fill zone. The next gap fill obviously is at 4,480, and that would be the zone to target, for my opinion, on the upside. Okay, FTSE 100 certainly has lost its steam. I mean, it was substantially higher overnight. I think on a Friday as well, it hit almost 6,130, and now it's down almost 100 points. So it is quite a strange move. I mean, we're consolidating on the FTSE 100 at present. We did have previous resistance equals support, so if it does go down and test that 6010, that will be solid support. For now, it's holding this previous support equals resistance zone, and we shall see exactly how it reacts. 60-minute chart has the inverted head and shoulders formation, so don't forget, the inverted head and shoulders formation is dictating the moves in this market. Okay, this diagonal trend line certainly has held well. And you are looking at consolidation here now, back into that previous resistance equals support zone. So if you do go back into that 6020 zone, that will be solid support, and it's an area that I may well enter a long position. Now, I did have a short position out overnight, given the strength in oil, given the movement in the Nikkei. Although China was down, it was high off the highs from 6140. Okay, it was off the highs from 6140, and so from my perspective, again, it has shown strength on Friday night and going into Monday morning, but certainly has lost that steam ever since the OPEC report came out. Okay, now the 10-minute chart of the FTSE 100, again, I did expect this support at 6050 to hold, but as we can see, it's failed to do so. Failed to do even that. Okay, and again, the next level of support you are looking at 6025. And 6010 on the FTSE 100. So certainly bear that in mind, and certainly give it some food for thought. Okay, now it's lost that diagonal trend line, so that certainly isn't good news. It's certainly bearish, and like I said, OPEC certainly is hurting the FTSE 100. Now, looking at it from a Fibonacci perspective, now take the pivot high to low, you are now into that Fib 75%. So this zone here should act as potential support. Given the fact that you got pro QE comments as well, that certainly should hold the FTSE 100. But again, the market is king. Market will dictate whichever direction it wants to go, regardless of mine or your opinion or analysis or insight. Okay, but again, remember this zone here, 6020, 6010, that is a zone that I will potentially be looking to go long, provided all of the variables are stable. Okay, and that topping tail certainly is a concern for the FTSE. Again, if we do go back to that zone, I will look to potentially short. But for now, it's just a pullback, consolidation, and looking for a potential higher high and higher lows to continue. Okay, I think that's a market wrap from my perspective. Again, the German DAX is into support, European indices are into support, and from my perspective at this juncture, I would certainly err on the side of the bullish camp. I am already long equities, so just confirming my position in reality really, but my bias certainly seems to be long from here. If we do start to flush lower, then it will be due to number one, oil, and due to potential euro. And it will be a potential risk of trade given the weakness in China. But I do think that's all been baked into the cake now. Okay, be safe and obviously trade safe. And I wish you a prosperous week and a prosperous trade. Be sure to visit cfds.com for your trading needs. Goodbye.